Hello everyone, Um this is Dmitry Lavrov and my friend Dan. Today we will make the stream about Algo Trading and about our robot. I'm very glad that you join us, and during this stream, please send question, everything about Algo Trading to this chat, and we have the list of questions which we got from our members, and we combine this question and try to reply all of them. So thanks for joining. Let's start. Dan, it's your part now.
Hi guys, I'm Dan, Dimitri's partner. You might know me. Today I'm joining him for this stream about algo trading. We have a presentation from my side, short one, 5 minutes, just the basic things about algo trading, some clearing up some things that we have seen that they are not completely well understood, and try to shed some lights on them. Also, we are going to talk about our robot. We are going to take your questions. We already have a list of very interesting questions coming from people who may or may not be able to join us today. And we are very happy to get further questions from you by chat. Please give us the feedback if you feel like, I don't know, our microphones are too loud or the sound is not loud enough. Tell us if we have connection problems. We are following the chat, and we will be able to react if something goes wrong. Since we are doing a new type of stream and it's our first time, there may be some technical questions, but hopefully
we will do the best
many.
for making this stream as good as possible from technical point of view, and also don't forget to subscribe to our channel. So it's time for presentation, right? And
Yes, and about that, how do you do? You should put my screen, right? Put my screen, right? Okay. So as I said, I will give a short presentation on algo trading, and I'm waiting for your questions. I call it algo trading, and why you should make an effort to understand what it is. That is because we have noticed that no matter how simple we have tried to make the robot trading using our robot, we were wrong to think that it's simply enough for people to just use some recommended settings. Everybody has different goals. People are starting want to know more about it, give suggestions, get involved. So it's indeed important to understand what it is if you want to get the most out of it. So first, what is a trading robot? It's simple. Trading robot is algorithm that executes strategies for a trader, and they are telling us that we are being heard double, Dimitri. Okay, we're trying to fix it. So, guys, can you tell me now if it is better? Is it better now? I'm waiting for the chat group. It says still the same. So what can it be, Dimitri? Am I twice? So Okay, now let's see now. There is a suggestion that you mute your microphone, Dimitri.
Me?
Yeah. How about now? Okay, I have a good. Do I have a second good? Okay, good now. Good. Okay, I'm gonna start talking. Sorry, there is a delay between what you guys see and when we talk. It's around 10 seconds. Okay, so I'll go back a bit and explain what I said. I said that I called it algo trading, why you should make an effort to understand what it is. It is because we have noticed we try to make a product that is a robot and just let people use the recommended settings. It has happened very fast that people want to get more out of it. They want to participate, get involved. They want to offer solutions and suggestions, which is great. But at the same time, there is a need for more knowledge of how this works and what you can expect from it. So this is why we're holding this small introduction, after which we are going to continue with the questions that we got from you, results. Dimitri will talk about how the robot trades, and all the time when you want anything, just ask it in the chat group, which we follow. Okay, so I was saying, what is a trading robot? Some of you may know, some might not. It's algorithm that executes a strategy for a trader, and it's usually used to automate trading strategies. This is a very simple definition, and we're going to start simple. What we can do after that is think about what does a trading robot actually do. So it executes trades based on a set of predefined rules, and these predefined rules can start with a simple strategy, or as the software or the code permits, or the algorithm that is implemented permits. It can be given advanced artificial intelligence, maybe even use the more complex setup to create more and more trading setups and adaptive strategies. What other things the robot can do is to do technical analysis based on mechanical setups. So that means also based on a set of rules, it can show you different trends. Usually these robots are called indicators, and I'm sure you know many of them. You have indicators on TradingView, which are basically a type of trading robot which doesn't execute trades, but it only shows certain setups. And other things that the robot is useful for is to be used to give an edge in manual trading. For example, these are those robots that we use as tools, the ones which are used as trade managers, the ones that for example, they manage the stop loss for you, or the trailing stop, which can be advanced or have different types. For example, a trailing stop, which is like the one implemented in MT4, which you can just make it trail every 50 or 100 or whatever number of points you want. Or there are advanced ones which just go under, they place the stop under each bar in an uptrend or a downtrend, or under each bar. And others which just go in steps, like the one we have implemented in our robot, and so on. A very good point is what the robot does not do. So the robots are not capable of creating strategies by themselves. They, as I said, follow a strict set of rules, like they are not able to come up with a new solution which was not given to them by the programmer. So the same goes for adapting. It's unlikely that a robot will adapt during trading, will adapt the strategy. So what it will do, it will be able to take different directions in the way it applies the setup if this was coded to him in it, actually. If it was not coded, it will never be able to do it on its own. And of course, the robot cannot trade based on sentiment or gut feelings. It can trade based on a certain experience if it has been running wrong enough, and if it implements this type of behavior where it records its old trades and tries to optimize them, but it is not able to based on sentiment or gut feeling. So he's not going to be like a real trader. Furthermore, when we made a comparison between human traders and robots, many of you already have been through this already on the chat groups, but for those who haven't, it might be a bit interesting. So when we talk about a human trader, we have certain qualities in comparison with the robots. So for example, it has intuition, a learning capacity. A human is intelligent, it's adaptable, it can understand faster and apply rules a lot faster and change them depending on the market conditions or on whatever different types of strategies it implements in different accounts. And it has a gut feeling. The gut feeling is something which we would normally have only when we have been trading in a market for a while. We know that that pair or that asset, we know how it works, we know what the news around it are, so we have a different reaction to the way we trade. The human trader has emotions, and even advanced traders sometimes fall into them. They just, you see the trade going negative and you panic, you forget your plan, you forget why you have your stop loss where it is, and you might do something regrettable. Humans generally have a lack of discipline, even if some of us are able to do it. Dimitri, there is some noise coming from you. Yeah. Ah, okay. Okay, it's rain. So the lack of discipline, most of the times we will break our rules and we will step outside of the boundaries that we set ourselves in our trading plan. We are slow compared to a robot. We're slow in calculations. We have slow reaction. We're not able to react on a fast candle, especially if you want to trade small time frames. And we have limited availability, both in time and resources. We need to sleep. We are imperfect, we need to eat, we need to have a social life. We're not able to be in front of the computer all day. The robot, however, can be there all the time. So 100% availability, it can trade 24/7 or 24/5 with most markets. A robot is more affordable than a human. So for example, getting a robot to trade for you is going to cost you only a fraction of what you would get for hiring a trader to do it for you, unless you are the trader, of course, and then you can use your own time and evaluate the cost of your time by your own rules. The robots have fast reactions and calculations. So for sure, they are going to be able to react on the small time frames. They're going to be able to react on the micro patterns that appear. They have no emotions. That is absolutely great. They will just apply the rules consistently and trade one trade after another, regardless of the pain of having 4 or 5 losses in a row. They will not doubt themselves, so that is good with no emotions. As negative points, they are dependent on the rules. As I said before, they have no capacity of adaptation unless it was coded into them. They have no intuition. They cannot smell the market. They cannot feel it. They cannot feel that with the sunshine comes more bullish sentiment. And they have no creativity. They are not able to find new strategies. So they're limited in a way, but they are very, very good executors. I took a small slide about which factors influence the algo trading results, and the correct answer is like everything. Everything can influence the trading results. First of all, is the quality of the strategy was used and which was implemented in the robot. It is the quality of the settings used, because most settings have parameters. Most robots have parameters, and for example, right now we are running EA first for more than 6 months, and even if some people have started in a top and now they're in drawdown, nobody has lost their capital, which means we're still using quality settings. But if we were to use bad settings, I can guarantee you that even with our robot, you can blow up your account. So it is very important to use quality settings. Coming back to the quality of the strategy used and implemented, also the quality of the code is very important. If the code is not good, if the code has errors, if it has caveats, like moments where exceptions can appear, it can also influence the results in a bad way. Well, sometimes it can, if you're lucky, you can get a good result, but you're not going to notice that. You're only going to notice a bad result. The trading environment is very important, which means the broker quality, the spreads, the time of execution, your VPS, the latency between your VPS and the broker server, absolutely everything. Remember that sometimes we have different trades on different brokers. Even today, everybody using IC markets had a trade of 450 pips, while me and others who are on Pepperstone UK, our trade was stopped at 150. So the small price differences, the small volatility differences, which are actually called liquidity for traders, right? Those things matter and they influence the results. And of course, there's the market conditions. The market conditions being the fact influence in this way that each strategy is bound to perform in certain market conditions, and for sure it has market conditions where it will not perform well. And that is for all trading systems. That's why I finish with this bolded underlined text that says there is no perfect trading system. Algo trading systems are no exception. So for any system, you'll have times when it will perform well, how it was for us in the first months until March, I think. And then you have a month like April where you have a drawdown because the markets moved in a way that the robot is not able to perform in those markets. Okay, to give you an idea of who uses algo trading, the answer is almost all types of players do. Institutional traders, retail traders. Institutional traders are banks and funds. Retail traders are smaller traders like us, you, who do it either like a hobby or do it also professional, but they don't have the resources to be an institutional trader. And the quantity of algo trading using, I have tried to find reports. There aren't any, like, I couldn't find any straight ones that talk only about the market share on the not the market share, the market allocation of algo trading, but many sources talk about 70% of more trades that are done on US stocks, which are done by algorithms. And about Forex, the numbers vary from 30 to 50, some say 60, some even say 80% of Forex is done by trades, by algorithmic trading. So this means that a lot of these algorithms are the ones called high frequency trading, HFT. So these trades, these algorithms are probably the ones performing micro trades, lots of trades very fast, and they are used by institutional traders who have teams of PhD graduates working on them, and even them they sometimes lose. So how to counter the problems of algo trading? Normally, I mean, ideally, there should be a algo trading portfolio. There shouldn't be the base shouldn't be put on only one trading system, because if we go back a bit, I say there is no trading perfect system, and you should remember that because it's absolutely true. So the best thing to do is to have diversification or diversification, depending where you're from, between different good robots that can perform in different market conditions. For example, you can have range market condition robots, you have trend following ones, you have breakout robots and scalpers, and all of them combined should give you a more smoothened out growth of your entire portfolio, because your portfolio ideally consists of a few trading accounts. Each of them, or maybe you have a bigger trading account and you let loose on it a few trading robots. But the point of these robots is that they should follow different strategies and they should target different market conditions where they can perform and give you positive results. And altogether, they should compensate each other's loss and make sure that over time you grow. Okay, that's it for now. I need some water. That was all the presentation for now, but from now on, Dimitri will talk about EA first, and we will take your questions, and we will try to do everything else. Oh, one thing, I did promise I would make a simulation on variable spreads, and I did not have the time, so that will come in a future video, maybe just a video, not a live stream. Okay, Dimitri, it's your turn.
So thank you very much for interesting presentation. Let's move further, and I will tell you more about the main idea, how this robot works, what is the training strategy, which acts like a basis for this robot, and we will talk about the model which we use now, and possible new models which can be used with this robot. We will talk about possible improvements altogether, and we can discuss the current results. I have some ideas for you which can be also interesting. So I would like to draw your attention. Just we have a chart. We have the price movement, and this is the gold market based on 4 hours. We see there important zones where the price action for us should be very important. We can see these zones, there are a lot of them, I just mark some of them. Price moved upward, reversed and bounced. Price dropped, reversed and moved upward. Reached the level, reversed and moved down. And so on, so many times we can see how the price moves, stops, reverses, and moves in opposite direction. For us and for robot, the zones which are at swing highs and swing levels are very important, because when price reach this zone, and when we have when we have the market which forms swing high or swing low, it means we can have trading opportunity. There are 2 possible signals which can be took into consideration in this zone. The first signal is just the reversal one. When the market forms a swing low, for example here, we can see, just a second, price moved lower, reversed, and continue the upward movement. So for us it is the support, the possible support zone. So buying from support, it's a really solid and reliable trading idea. The robot can use reversal signals and buy based on reversals. It can be during range market conditions, it can be during the trend market conditions. It is just one of possible trading opportunities. Another trading opportunity is also we have, let's say, price movement where price reached something, in our case it's a level, and bounced. So for the market we have the resistance level. There is another possible trading opportunity to use breakouts above resistance or below support level, and use this signal for entry the market. The robot also can use breakout signals and catch such situation when price breaks important swing high, swing low, and moves in new direction or continue the previous direction. So we have opportunity to trade based on a reversal signal and based on breakout signals. For us, price action and forming swing highs and swing lows it's a very important moment, and the robot uses signals like reversal and breakouts for entering the market. It is just the main idea, and I should say that it is it's the main idea of trading. when price reaches support zone or resistance zone and reverse, it's a good place and a good time for opening a trade. If price breaks something like a resistance line, resistance levels, support line, support levels, it also just is signal that the market is going to continue the price movement. We can try to catch momentum, and it is also give us a solid trading opportunity. So if we talk about the main idea of the trading strategy which the robot uses, it is solid, and it is based on technical analysis, price action, and it is based on logic. There is a question: how we can tell the robot which swing highs and swing lows to use? There are different variants for spotting these swing highs and swing lows, but let's say that the simplest one is to use fractals. What is fractal? Fractal is just a combination of 5 candles, where the middle candle will have the highest or the lowest value. Just for example, let's apply fractal indicators to our chart, and we can see the important swing highs and swing lows, and we can tell the robot, so just use fractals and price action at this zone, reversal signals or breakout signals, just for trading. In our case, we have following. Just I marked the most important levels where price reached the resistance zone and bounced, and for the market this zone was important. We have fractals, and we have several fractals. The robot will use the rule where it is written that if we have beta entry level, the robot will use the latest signal with beta entry level. If we talk about buying, the beta entry level based on fractal will be where fractal will be low, where the robot will pick the lowest fractal. For example, if we talk about these several swing highs, we have 1, 2, 3, and if we talk about the rule, the robot will take this one because it is the lowest one, and it has the beta entry level. The same will be about shorting. If we talk about shorting, the higher price and the higher fractals for selling, it will be the beta level for entry and the signal which the robot uses. So if you look at this chart, you can see that we have many fractals, and not all of them, of course, can be used. But still, we talk about just the main idea, and just mainly fractals can be used for trading, even if the quality of picking the right and the most important swing highs and swing lows using fractal, it's not perfect. Of course, it can be also improved by additional filters. We have additional filters which allow us, for example, to set up the space between several fractals in order to avoid, for example, such situation where we have several fractals for buying. Here it is. But we can use the filter where we will make something like a buffer, and the robot will skip the most part of them, but use only one which match the criteria. So it's just one of possible variants to avoid low quality signals from fractals, but at the same time we can use a lot of training opportunities based on different time frames, and we have also some ideas how, for example, to optimize the robot based on for this model and pick only the most interesting fractals. I just to make it clear why not all fractals can be used and why it is this space can be used for improvements. If we talk about such price movement, we see just price action, price reach the level, support level, bounce, and we have two fractals which can be with good quality. The same goes about this one, where the market moved upward, reversed, and moved down. When we talk about low quality fractals, let's call them like this, in this space we have, let's say, these two, which are not so good and which are not supported by logic. So the logic is price move upwards, bounce from the level, and reverses. So for us, it's better to use V-shape formation like this one, where reversal signals and breakouts will be much stronger. Then if we have such spaces where there are a lot of fractals, where there are not clear swing highs, swing lows, and mainly we have such type of signals, they are really good for providing false signals, fake breakouts, not solid reversals, mainly when we have range market conditions. So if we talk about trading, for us it's better to use markets moving in trends, but there are some cases where we can use, for example, reversal signals from the robot and from fractals, but for this we need a wide range of sideways movements. Markets are different. From this point of view, it's better to pick the most volatility markets. It's better to use the time frames where we can find really solid swing highs and swing lows. That's why now we have the settings which are good for using based on 4-hour time frames, based on daily time frames, and when we switch to when we talk about switching, for example, lower time frame, what is the main problem now for using the robot with lower time frames? There are too many sideways movements with with narrow range. There are too many fractals. These fractals are low quality. So we can say there are too much noise on lower time frames, and for this, for avoiding this noise, we need to use a lot of additional filters just to pick the most reliable swing highs and swing lows for trading. Here is just the example of 15-minute chart, and you can see how many fractals here. And not all of them are good for trading. Let's say like this period where we can, for example, in this period where we try to catch breakouts in this sideways movement, it is a good time for making loss trades here. Probably here when the price tries to break the level. In range market conditions, any market doesn't have too much power for breaking the level and for continue this impulse. That's why now we have just the situation. We use one model for trading, where we use breakout signals and we try to catch momentum after breakout. For example, just in order to show you clearly, we don't use any filters. We use just only breakout signals and slide settings which allow us to make something like a buffer in order just to avoid opening based on every fractal. There is a space where the robot doesn't use fractals which are not matched by criteria and by the rules. At the same time, we have market conditions. When we have trend market conditions, and when we open trades in the direction of market conditions, we have really good chances to catch good trades based on breakouts, and we can say that we use a model which is based on breakout strategy. When price breaks important levels, in our case it is swing highs, swing lows, and continue the movement in the direction of breakout without retracement. So now the robot uses this model, and based on tests which we made and which covered 10 years, this model and this type of trading was workable and profitable. So that's why we used this model. We use for gold market, for Euro USD pairs, USD GPI pairs, GBP USD pairs, Euro GPI pairs, and we had a period in real trading when the robot gave us profits month by month. But during let's say March and April, the robot started drawdown. For this type of trading, which we used for these settings, I just remind you, the perfect market conditions are when we have a strong market, when we have good, let's say in this case swing high, when we have a good breakout and price moves in our direction. In such way we have profits. But when markets start moving sideways, when a market starts moves just in unpredictable way, when markets starts moves in narrow sideways channels, for this model it is the most unsuitable conditions. For example, just it's very simple. We have a good swing high here. The price breaks it by these candles and reverses and we talk about 1 hour time frame gold market, but it will apply to any pairs and for 4 hours for daily charts. The idea is when we have unstable markets, price breaks above the level or below the level and retrace. As we use also close stop orders, price easily reach stop and the model doesn't work. It can be the main reason why the robot shows us drawdown. What we can do with such market conditions? Let's start from the beginning. We have the model which is logical. We try to catch the breakout, and for us it's important to get the movement without retracement. It is the perfect variant. Like in this example, we have strong bullish candle and continuation of the uptrend. When the trade is activated, we have some space for activation our trailing stop. And when market continues the movement in our direction, we protect our trades. Then we start trailing profit size. So the stronger movement, the bigger profit can be done. But when we have retracement, so we can get just only full stop loss. It's normal. For this type of trading, it is logical, it is absolutely okay. There are market conditions where these settings are workable and very profitable, and 10 years testing just prove it. There are periods of markets when we have unsuitable market conditions, and stop loaders are also normal in this case. it can be, we can't make just a conclusion that the robot doesn't work. The robot works, but the settings, exact settings for exact period of time are not suitable, and that is the main reason why we have drawdowns. Let's just look at our just current results based on gold for our time frame. It is the robot showed us the best performance. Let's look. We started from August 2018. The first month was unprofitable because, to my mind, we started it not from the beginning, and we got. Hold on, because it looks like you can be. You can comment now. You don't have opportunity. I will give you opportunity to comment after this presentation. Okay. Okay. We started from August. It was a good September. It was amazing October. It was profitable November. It was profitable December. It was profitable in January 2019. It was profitable February. And after that, we got 2 months. What does it mean? Based on the past performance, can we say that the robot doesn't work? I think no, because, or can we say that this model doesn't work? I also can say that we will be wrong if we say this, because the robot proved that these settings and these settings are workable, and we have, let's say, 6 months, half a year, with positive results. With such money management which we use, we don't cover the previous losses. We use proper money management. We use stop losses, which are real, not virtual. It's okay to have several months like in drawdown. Based on our past performance, we have many months just during the year in just below zero, about zero. So from this point of view, yes, it's not funny, especially if you started from March. You could start from the peak of results and start falling with the robot. Yes, but we are talking about trading based on the robot, where the priority is to protect capital, where we pushed all our members to use proper money management, don't risk too much, and so on. So, and the robot is focused on long-term trading. It can be months with drawdowns, and it's normal. Again, we can talk only about these exact settings can be workable or not. So based on the past performance, we can say that these settings which we use now, they can be still workable, and the drawdown means just it's a part of trading. There are also some variants which can make our trading stable. And when we talk about stable trading in the long run, we need to use different tools. We need to use a portfolio including different types of trading, different models of trading, different trading strategies, time frames, and so on. Just the main idea is, in order not to just have risk from one trading method where you can just get yes, full profit, but at the same time, if market conditions are not good for you, you start getting drawdowns. Just in order to make this drawdown less, it's better to diversify the trading using trading portfolio, including, for example, manual trading strategies, algo trading strategies. Or if you use only algo trading robots, it's better to use robots based on different types of trading. Like we have scalpers, we have trend following robots, we have robots for range market conditions, we have robots for breakouts. Now we use robots for breakouts. But at the same time, the robot can be used for trading based on trend following rules. We are working for searching workable settings for realizing this type of trading, like not trying to catch small movements based on breakout, but the idea is to catch the price movement when the market is in trend and when the market continues the trend direction after correction. For example, we have just one, let's do it for our time frame. We have market where, just let's do it here, where market moved upward, and we have the uptrend here. The question is which settings we can use for join this trend. I try to use it just breakout signals, reversal signals, because for both types of signals we have reasons to use them. For example, you use breakouts here, you use breakouts here, here, about these highs, and so on. So, and you join to the trend. You can also use reversal signals from this robot, which are based on these fractals. So you can buy from here, here, and here. You can buy based on these levels, and so on. From this example, we can see and we can say that reversal signal for trend following will be much better because they allow to enter the market at better levels. There is a question: how to tell the robots that it can trade only in the trend direction? How to find this trend direction, and which signals and which fractal to use? From this example, we can see that the most profitable signals can be from buying. So we need to allow robot only buy and allow robot and don't allow the robot to sell. For this, the robot has different filters. There are filters based on moving averages, filters which can tell us when robot can trade based on volatility and when robot can't trade if volatility is low. We have we have volatility filter based on ATR indicator. We have trend filter based on MACD, based on moving averages. And how, for example, new model can be built if we talk about trading, like swing trading, using the robots here first. The idea is very simple. For example, we use simple moving average with 50 periods. It can be exponential moving average, it can be weighted moving averages. The robot has settings allowing to pick any type of moving averages and use different periods. The question is to find the most reliable periods which can be proved by the long history. So based on this example, we can easily use just 50 period simple moving average, and the robot will follow the simple rule. If we talk about filter based on moving averages, like trend filter, if price is above moving average, the robot only buys. It doesn't matter, will it be buy breakout signal or it will be reversal signal. So the robot will only buy if the price is above moving average, and it will only sell if the price is below moving average. From this point of view, just combining, for example, the idea of getting the most interesting entry levels, we can use reversal signals. We can activate trend filter based on moving average, and the robot will buy only reversals based on fractals. The signals will be just like after this fractal, these fractals which are which allow us to open trades in the direction of the uptrend. At the same time, we also can use breakout signals, but again, these breakout signals will be good in the beginning of any trend. It doesn't matter uptrend or downtrend. But when the trend will be not far from the top or the bottom, such type of signals based on breakouts won't be so profitable. But with proper money management, with proper risk-reward ratio, I think the whole results of catching trend movement will be positive, the whole results. Also, if we talk about trend following model, which will be just alternative for breakout model, which we have now and which we use now, it will allow us to use wider stop orders, just in order to avoid cases when price will move the movement in the direction of trend, and then the price will start correcting this movement. So here we can try to realize the model like swing trading, where we and trend following trading, where we stay in the market with correction movement and with impulse movement. But our target is to catch the long direction and the long movement. From this point of view, we can use a really very good risk-reward ratio, just like 1 to 2, 1 to 3, maybe 1 to 4. We can use, for example, wide stops just in order to increase win rates and just exit from the markets only if the market really reverses and continues the movement against us. So from just this idea, we can build alternative for trading, and it can be used for diversification just in format of one robot. So one robot can provide breakout type of trading and trend following trading. We can use additional filters like volatility filter for breakouts based on ATR indicator, where the rules are very simple. If here is ATR indicator which measures volatility. If, for example, the line of ATR is lower the signal level, and mainly it's the period of low volatility, just the robots don't trade at all. If ATR line is above the signal level, for example, like these cases, we have the market with volatility, and the robot can open trades. The same goes about market condition filter, which is based on DMI, and this indicator also allows us to improve signals for trading based on trend following models. If the rules again are simple. If a DX line is above the signal level, and this signal level can be set up by parameter in the indicators in the robot settings. If this ADX line is below this level, so the robot consider that the market doesn't have trend, and it skips trading. But if ADX line moves above signal level, in our cases it can be 20 level, like the moment like from here and above. In this period of time, the robot use signals, and in this period we can use trend following model. There are also settings allowing us to set up different variants for trailing stop. If we talk about trading using the robot, we can pay attention several parameters which are very important and which can give us different results. So what type of trades we use, breakouts or reversals? Sometimes only breakouts can be workable, and I don't know exactly why, but now it's better to find workable and profitable settings based on breakout signals and just using this breakout trading model. But at the same time, if we look at the chart, we can see that reversal signals and combination of breakouts and reversal signals also can be moved. But now for us it's rather difficult to find reversal settings. It's just the question of getting the proper parameters which can be profitable in the long run. It's very simple to find workable settings for 1 year, but during 10 years they are not profitable, so we don't need them. The question is how to find different parameters using different filters and combination of different settings in order to find just the reliable and workable settings which can be proved by 10 years of trading, which can be proved by real-time type trading. From this point of view, we are working and just trying to just find different solutions. So we talk about different types of signals. We have potential to build different settings based on breakouts, reversals, and breakouts and reversal signals. Another thing is what the robot should do after activation a trade. We have several variants, and one of the variant is the robot just activate trailing stop and start trailing using steps and the distance parameters which allow us to set up when this trailing stop will be activated and how far it should be, how far from the current price it should be, and how it should follow the price movement in the direction. So if these parameters we will use in the wrong way, even the whole profitable model also will be unprofitable. So this part of work also must be done perfectly, just in order to find the most reliable and workable parameters for starting trailing stop, or maybe not using trailing stop, it's also like a variant. Picking the right step and the right distance. If we use a small distance, it means any pullback can close potentially good trade. If the space between current price and trailing stop will be huge, it can just cut down on potential profit if the market reverses and moves against this trade. So this part of work is also includes a lot of different combinations and variants. And of course we have just a simple variant for trailing stop based on steps, parameters, and just settings which are typical for simple variant of trailing stop. Also we have alternative where we use a trailing stop based on a moving average. For example, in our case we can use moving average like line. I will delete everything wrong, everything drawings. Just we can use moving average like a line where the robot will place trailing stop and it will move trailing stop using moving average value candle by candle or bar by bar. We can use different types of periods for this moving average. And from this point of view, we also have variants, we also have combinations, like a very simple example. Let's see, we use, for example, reversal signals and simple moving average as a trailing stop model, as a tool for trailing stop. We use reversal and we got fractal down, and the robot uses reversal signal and opens trade here from this level. So if we use fixed fix parameters and fix variant of trailing stop, like I explained before, with the exact steps, exact distance, probably this pullback will close your trade with a very little profit. But for example, in this case, using simple moving average, where with every new candle the robot will move trailing stop below the moving average based on exact parameters, it will allow us to exit from this level. So there is one trade with the same entry level and with the same idea. We try to catch, we try to join to the uptrend, but just using different types of trailing stop, it can give us two different results. So the difference can be huge, and it is just only one trade. When we talk about trades based on 10 years period, the difference can be really super huge. So how the robot will manage active trades after opening is just another part of work, and the settings must be also must be used properly. And the third part of work, which can be done, which filters and on which time frames we need to use just in order to make signals, the original signals, when to buy, when to sell, just and which, for example, swing highs and swing lows use. All these additional filters allow us to just build another type of model which will provide us the idea is to get more reliable signal. But using different filters, this target also can be unreachable, because wrong filters with wrong parameters will give just nothing. This part of work also should be done, and of course it should be based on the logic, and it should be based on deep testing, optimization, because manually there are too many parameters and there are too many combinations, because we have combination for should we use trend filter or not, where we should use it, which time frame we should use it, what about the parameters, what about periods for simple moving average, what about type of moving average. If we talk about market conditions filter, we also have to reply many questions with where to use it, which parameters to use for indicators, for signal levels, and so on. So there are a lot of combinations, and manually it's really rather difficult to find, but optimization can give some ideas. But again, these ideas will tell us the past performance using these new settings and new model was good or not. If the past performance was good, it doesn't mean that the future results also will be like the same. First of all, the past performance allows us to understand the settings are workable or profitable or not. If yes, what about estimated, what about profit which was generated, what about drawdowns, and we can use only this information just for predicting possible income, possible drawdowns. But again, every new minute market can be different from the past. So I would like you to push just your thinking in the way that the past performance will never guarantee you the future results. And all brokers talk about it, all trading signal providers talk about it. Yes, we could have amazing past performance, and it can be proved by tests, it can be proved by real trading, but every new candle is just a new story. So we have the robot which can be used for breakouts like now we use, and which can be used for trend following like I showed you. There is potential in further improvements also. We are going to add another types of money management. Now we have only fixed type of trading, or only fixed variant of money management, where we have exact stop loss size, where we have exact profit size, and where we use or don't use trailing stop. It's possible, for example, to use not fixed stop orders based on fractals. So in some cases we use now, for example, 2 or 300 pips. In some cases with entry level it can be more than 300 pips, and in some cases it can be less than 300 pips. But the idea is to make and to use stop orders flexible based on swing highs and swing lows. So if we have entry level here, the stop must be placed only below this swing low. If we use entry level here, the place for stop loss will be below this local swing low. So the size of these two stop losses are different. So it will allow us to follow the market conditions more closer, and it can be also give another type of results. Also, we are going to add another type of trailing. Now we use standard trailing stop and based on moving average. It will be possible to add trailing stop based on candles movement, just in order to catch this swing movement in one direction. There are ideas to improve how to pick the right fractals or the right swing highs, swing lows for trading. There are also ideas to make more complicated money management strategy, just not only based on fixed or flexible stop orders, but also try to manage the previous losses, maybe lightly increasing the lot of future trades. It's not the perfect model, but it can be like alternative. And again, there are a lot of different variants how to improve this robot. And just from my opinion, now we use the robot maybe on 10% of all potential which it includes. And we have a lot of space for improvements. Even with the current settings, we have a lot of space for improvements and for building new types of trading. And with adding new parameters, it will allow us to trade, just to build more variants of trading. So I try to explain everything what I wanted to tell you today. Of course, maybe I just tell you the main ideas, and maybe it will be better to make special videos just talking about only one model of trading, or maybe only about one type of settings, and how to make them better or to comment them. But again, the idea is the current settings which we use, especially for gold, from my point of view, they are workable. Just the period which we had, in just the period of trading, and when we talk about profitable trading in the long run, such periods are normal and typical. It's impossible to avoid all stop loss trades, closed by stop orders, because even manually, even thinking and even be flexible for taking trading decisions, even super professional traders, they make loss trades. It's a part of trading. The question is how you manage your capital. Let's just move back to the current results, and we see a very simple picture. We use, let's say, conservative type of trading, and we got drawdown like 11%. So the maximum drawdown was 20%. If you it is about maybe to my mind 1% of risk for each trade, maybe 2. Dan will correct me if I'm wrong. But with such type of trading, this drawdown, these 2 months of a great number of unpredictable movements, with which gave us a lot of false signals and a lot of trades closed by stop orders, gave us workable drawdown in 20%. If you use wrong money management, you could get 50% of drawdown. You could get 100% of drawdown, so you could destroy your capital. With wrong money management, you can destroy your capital using any trading strategy and any trading robot, even if this robot is much better than ERFers or something like this. But the difference will be only in money management. We will continue using our robot and make profit when market conditions will be suitable, and we will get profit in the long run. But if you used wrong money management, you just blow up your money, and that's all. The same trades, the same settings, the same robot, everything the same. There is only one difference in money management and different result. So think about it. We talk about money management a lot of time. Of course, from the beginning, you don't trust us and you think that our words they don't have any sense. But believe me, proper money management is the key to the profitable trading in the long run. There are no other ways. So now let's talk with Dan, and it's time for working with your questions.
Oh, is it my turn to talk?
Yes. If
Okay.
you want to show something, share your screen, just let me know. I need to switch you.
No, I don't need to share my screen. I think we should take the questions. It's a question about, like, there is one question which came now from Nico. Is there some kind of roadmap you can use for the robot development? I know you do a lot of parallel to improve the bot even more, but I lost a bit track. You have spoken a bit about it. Can you present a bit the roadmap, what we did in 2.0.4 and what else we want to do?
No, we move in such direction. We with every new version we try to add something new and improve the previous performance. We in the previous version we add just the filter, which allow us not to use all fractals but have some buffer for picking the most suitable fractals for trading. In the current version we added so we added time filter and we added ATR filter, the filter for volatility. When we talk about trading based on the 4-hour time frames and based on the daily time frames, it's okay to use settings like we have and parameters of the robot like we have now. But when we move to the 1-hour time frames, minutes time frames, it will be very important to use the robot and use the signals in the right way, in the right time. And from this point of view, the time filter acts a very important role. If we talk about let's say Euro USD or GBP USD pairs, they are less volatility during the night period, during the time when European exchanges don't work. So it's nighttime, and it is logical that when the main players are not active, the volatility is low. Mainly we have range market conditions, and this type of settings which we have, range market conditions with low volatility, it is the worst situation which can be. So using time filter, it will be possible to skip these night periods. Also, we can, for example, pick the most active hours during the day. If we talk about low time, if we talk about trading based on the robot and based on the current settings, we can use, for example, 5-minute charts, 15-minute charts, and pick the most active hours. It can be just the hours when European exchanges work and when exchanges from United States join to this period. There are 2-3 hours of very active trading. It can be just about the afternoon time based on European time, and use this filter and pick the most volatility market conditions. So we added. Alternative for volatility can be ATR filter, which follows the really very simple rule for the robots. If we have the value of ITR less than signal level, which we can set up in parameters, the robot doesn't trade. If the value of this indicator is above the signal level, it means that the market has some activity, and we can allow the robot trade. So these improvements now are ready, and we also make a work where I decided to make new robots and optimize here first, just using blocks, different types of blocks responsible for different types of trading, like filters, money management, just main idea of trading strategy, just in order to test different ideas using the same structure. It will make the whole work easier to find a workable combination of blocks, settings. It will be possible to use in the future for new robots, for optimization the old robots. So we try to make our work for making robots better, to make them faster, more reliable, more stable. Also, we try to optimize old settings and version of robots. So there are a lot of work from our side, but also this direction can take all time and all efforts and all sources from our side, because huge space must be covered, huge space. When we talk about combinations of different parameters, it can be maybe, I don't know, maybe hundred thousands of combinations, different types of combinations. So only optimization.
Okay. I will take some of the next questions that came from our groups, because they're technical, related to testing, things that I was more involved with. And I will ask you for some of your opinion when I feel like I need some support, because some of them are indeed very interesting. So first, there is this question. It says, I noticed that the EA opens buy and sell orders on the latest fractal high and low. When does it cancel these orders if price does not reach them? As far as I know, I mean, as far as we have discussed and we made the robot, the buy and sell orders are deleted and replaced when a better trading opportunity arrives, which means when another fractal is formed, while you have already a pending order. So if you are looking at buy trades, if your pending order exists, if another fractal forms lower, it will replace the one from before. There's one more thing you might have noticed or not. If you have a trade running for a longer period, like 1 day or 2 days, you will have new trading opportunities if new fractals are created during the same during the time the trade is active. So I hope that answers that question. Then it's something about trailing stop, and it's a very cool question. You say, this is from Hussein, by the way. First trailing is at step minus distance. Consecutive trailing is at step. New stop is the last stop plus step in case of buy. It should be at the first step, move the stop to the open, and then add the start. So what he means is to the first trailing stop to be the break even. Consecutive trailing should be at the next step with new stop equals the last distance, the last stop plus distance. This reminds me of my discussions with Dimitri talking about trailing stops. I have put the question in the chat for those who want to follow it. So in my initial discussions with Dimitri about the trailing stops, I had the same questions. Why did we choose the trailing stop like this? And the answer is basically it's one of the variants of trailing stops that works, and it's true. What we have now, it's actually not the way you described it. It's it depends on the start. So if your start is under the step, you will start the trailing at the first step. If your start is above your step, so for example, if your step is 300 and your start is 400, then the first time you will activate the trailing stop, it will be at the second step. So 300 plus 300 at 600. Okay. We tested this type of trailing stop and it worked, but it doesn't mean it is the only way to create a good trailing stop. And that is what we're doing in 204. We have implemented new trailing stop options, and that's what we are probably going to do more and more with the sequential versions. We are going to give more versions of trailing stops as we test them and as we find them workable. For example, what you suggest, I think it's cool. Instead of having the trailing stop start from the actual price, you say, okay, each time we do a step, let's raise the stop, but be somehow in lagging more with the price. So yeah, that is definitely probably a workable variant. And we should try it. So I don't think one should replace the other. I think they should be compensating each other. So one strategy or one chart should use one stop, the other one should use the other one. I'm sure the results will be more interesting. By the way, if you're interested about the new trailing stops opportunities, I think Dimitri explained them a bit. One of them is trend following, right, Dimitri? We want to follow candles.
I like how, for example, trend stop based on moving averages can work, because we can. There is an idea. Let's say there is the basis. We can try to build trailing stop based on two models. The first model is really very simple, and let's say it is for scalping type of trading, it's just must have. When we don't allow market to breathe, so market breaks something important and market moves in the direction of breakout, and trailing stop just follow this price movement and this breakout as close to the price as possible. Just any attempt of the first attempt to retrace, and we fix this very small type of profit. So from this point of view, just it's based on my test results, it's based on other robots which I tested. It's really very simple to find a workable solution for many time frames and many markets. Just we trailing stop follows the price as close to possible. Just the distance can be 10 pips, 15 pips, or even less. The main idea is we don't allow the market to retrace. Another type of use on trailing stop can be like we make the distance between stop loss, between trailing stop and the current price as much as possible in order to allow the market to breathe, to make retracement. But when we talk about the price movement, it can be swing movement, it can be trend movement. After retracement, the market continues the movement in the direction of breakout or in the direction of a trend. In this case, we need to use a wide distance, and this model of settings, it's not about this. It's maybe something. It can be closer to the first model of trading. Using moving averages will allow us to stay in the market with active trade and allow the market to breathe and to make retracements. Only the trades will be closed if price crosses this moving average, which can be used by different periods. If you want to follow and if you want to catch long trends, you will need to use widest. You will need to use a long period for moving average. If you want to catch short movements, you can use short periods for moving average. So just only one variant of trailing stop based on moving averages will open a wide range of possible combinations, and it will allow to build different types of models based on your needs. So from this point of view, it's really very good feature which we added, and this feature also are included in all my other robots.
Okay, cool. The next question is also from Hussein, and he says that the EA does not allow users to manually change the trailing stop on the graph. Sometimes the trade needs to be given some room, or the trade might have gone too far in the positive, and we need to trail on the last higher high, lower low. There needs to be some flexibility for that. I have to ask, are you sure, Hussein? Because I have some accounts where I frequently change the trailing stops by myself, and what happens is that the next step, the trailing stop indeed will be changed again to the place where it should be. But if you see a movement that is good, like for example you're at almost 600 pips and you want to already secure that 400, 500 pips, you can just grab the trailing stop, the stop loss, and move it where you want. Not sure. I will check if you write in the chat if you have tried to do this, but it is possible. And unless you don't have permission from the MT4 to do it, that's the only reason why I see you cannot move the stop, because you should be able to move the stop. I forgot to index
I need
this.
to comment. You need to understand that such manual correcting it will break the let's say it will break the performance which was confirmed by the past tests. So if you change something manually, it means you will change settings and the rules. And it will means that the robot will use something different from the previous models, which was proved by testing. Are you sure it is a good variant? It can be, of course. I wrote in Telegram chat that this robot also can be used in combination of manual trading and using just traders analytics and understanding of possible market movements and this robot. So you can make your own research and, for example, understand that during this week the price will move only upwards. So based on this decision, you can allow a robot manually open only buy trades or only sell trades. You can also manage them manually, but in such a case, don't forget that the previous performance will mean nothing, because you will use new rules.
Me, on the other hand, I am okay with this. I think some people have shown and proven that they work with the robot also in this way, that they use it as a semi-automatic tool. So they intervene in the trades and they delete some, or they just change some entry points, and it works well for them. So in this case, I don't know. I think sometimes some people who want to do their own trades can use the robot as a semi-automatic tool. Why not? Hussein has replied. He says that the trailing stop is usually reassigned on the next tick. And I have to say, given how the code is made, how the code is made, it might be true, but I don't really remember how it was. For me, I think it worked. Maybe the price was around the step, and that's why it happened. The idea is when we spot a major move on the breakout, we can partially close the trade, then manually trail based on lower levels. Yes, it can't do that right now, but we can think of a way to make it semi-automatic. Sometimes in the future, not into 04, because this would be quite a major change. And whenever we complicate the code, the testing becomes harder and harder, because more parameters means more variants of testing, and that takes the most time. And his last question is not really related to any of the previous topics. It says EA first has worked on a breakout, which constitute around 30% of cases only. What about an EA for reversals? I think we discussed this a bit about the reversals. If you want to use the EA first for reversals, if you want to do that, probably from 204 it will be more interesting, right, Dimitri?
Yes, it just again we're talking. We have to talk about the right settings which must be found. Based on the logic, reversal signals, as I showed on the chart, they are really workable, and they're workable from the logic. When we talk about trend market conditions, and you use reversals for opening trades in the direction of the main trend. Also, reversals are logical when the markets move in sideways in price channels. So it just also the typical strategy for trending based on reversals from resistance levels and based on reversals from support levels. So from this type of trading also it can be used. But the question is, how to explain the robot? What are the best conditions for trading in the range using this type of reversal signals? Like a variant, it can be used in semi-auto mode when you, for example, using different tools to pick the periods of time where the market moves between resistance lines and resistance levels and support lines levels, and you manually you make settings allowing the robot trading only in this exact period of time, and you need to monitor the market conditions. When we talk about how to make it like automated system, I also explained that there are a huge number of market conditions, and it's impossible to code all possible patterns, settings, combinations, market conditions, situation. Just combine everything in one robot, make it workable and stable, and optimize everything. Now we have let's say not so many parameters. I saw robots where knowing how robots work, it's really very difficult to navigate through a huge number of parameters. Just in order to teach robot how to skip these periods and use that periods, there must be we must involve a lot of settings, tools, and maybe we must teach robot to learn from the past experience and optimize the work. So it will be another type of robot. So, and of course it will be another type of work with a lot of parameters. Like Dan said, it's rather difficult to optimize. So even we use several settings for optimization with different combination, it will need days. If we use 100 different parameters with a lot of steps, it will take years. So we need to find balance between workable settings, good optimization, enough parameters which allow us to be profitable in the long run, and use them.
Also, at some point we can just create two robots instead of one, because having so many things, trying to fit all of them in one robot might not be the best idea, while we can actually have specialized robots and use them together on the portfolio. I have a suite of questions from Shireen. He is the user, one of the users who uses the robot as a semi-automatic tool, and his performance is actually, well, a few days ago it was double of ours. When we were down at 20% profit, he was up at 40. So in this case, double, double depending on what kind of capital you have. Let's say we have the same one. So he gave us 6 questions, and I'm going to answer a few of them, and I'm going to ask you to help with a few. The first one is about the optimization period, and it's a rather large question with 3 parts. It says, should we use 10 years to cover all market conditions, or should we use the last 1 to 3 years, since the older years might not reflect the current market condition? Some suggest that we should forget about the number of years and just target a minimum number of trades, say 300, 400. I tend to like that approach, since it means if I'm testing the 5-minute time frame, I might be testing only 1 year, and if I'm testing 4 hours, I might be testing 4 years, and if I'm testing 1 day, I might be testing 7 or 8 years. I believe the second options makes more sense. Based on your experience, what do you recommend and why? So the first part of the question, which I will put on the chat group also. Yes, definitely you should use, no, actually you should use a combination. 1 to 3 years to find, like, you have, when you test for 10 years, the test runs are going to be very long, especially if you're going to run optimization. It's going to take a lot. Like we really had at some point when we were fine-tuning V3, we ran optimizations for more than 1 week. So when you have, the way I do it, for example, I first test the last year, and I find range of settings that perform well from the profit and drawdown perspective. And then I test them on 3 years or 5 years, and then I eliminate the ones that perform poorly in this time, and try to stick with the ones that perform medium well. And then I further test them on 10 years, like each time with a less wide range of settings, so that when I test on the last period, the 10 years, everything is at the minimum. Like I test the minimum number of things, and it still adds up to a few thousand tests usually. So I use the short periods to filter the trades that for sure failed. So for example, if we have settings that give 40% drawdown in the last year, for sure I'm not going to consider them. So from the start, I eliminate everything that is under 33% drawdown over, I mean. For the second part of the question, target a set of minimum trades. Absolutely, if you test on 5-minute time frames, although those are not very reliable, or on small time frames, you don't need to test on the 10 years, not at the beginning at least. So what you should do is definitely test on a more, if you're gonna test on the 5-minute period, you're looking for a more like short to medium term robot. You're not going to look at the long-term trading necessarily. So for those robots, you know that you're gonna put them to trade, and then you're gonna let them trade for a couple of months, take your profits or your losses, and then reset them or use something else. So for sure, you can use 300, 400, 1000 trades on the 5 minutes and see where that goes. And for fun, at the end, you can also trade for 10 years and see how would it actually perform on the long run with these settings. So yeah, I think that should answer the question. Dimitri, do you have anything to add?
The longer periods and the more trades can be included in tests. The more solid and more reliable data can be can be reached. So from this point of view, it's better to use a long period of time. Of course, again, we must have balance. We started testing from 2008. It was a period of financial crisis. But if we move just let's say 1895, the market will be different at all, and this data won't be good for us. But using 10 years period will allow us to catch the market movements during a financial crisis. If there will be a new financial crisis, we will know just closely the possible performance of the robot. We will have the period of stable market conditions without financial crisis, and it just will be our main model for trading. So from this point of view, yes, we must get on the one hand as much data as possible. On the other hand, it's better to focus on the market which and market conditions which were not far from our time.
Okay. The next question is about. Wait, I'll just post it. So he says. Some people recommend that you regularly fine-tune the settings by running the optimization on the last 3-6 months to pick the latest market conditions, but that means the optimization will be based on short-term durations. Does this make sense, or better focus on a longer approach as mentioned in item 1 above? I think you have more to say than me, but I would say focus on the long term, because you cannot know what kind of market conditions will follow the current market condition. As far as I know, this is kind of a false hope. You can get lucky, of course, and if you get lucky, good for you, but trying to model on short term, I don't think is the best way. Dimitri,
If you use short-term testing and optimization, you can find the workable settings much faster, because the robot will pass different settings on short market conditions periods again and again. It can save you time, but again, why not to use this short-term period for making workable settings for this type of period and testing it on the long period of time. So if these settings will be workable in the long period of time, where there will be different market conditions, so and the results will be good, it will be good from both sides. So you save time, and you will get proofs from a long time periods that these settings are workable in different market conditions. Why we need to test in the long period of time? Because in the long period of time we will have a lot of different market conditions, and more period of time, more market conditions different. So from this point of view, it's very important.
Next question is about using variable spread in testing and optimization. And again, it's a really cool question. I'm just posting it in the chat. It says, can you please explain why you do not prefer to use variable spread, although it can be calibrated to provide spreads close to the spreads on the broker we are using? What are the disadvantages of using variable spread compared with fixed spread? When we discussed this, and I'm starting to think maybe we were not perfectly right, but when we discussed it, it was about the spreads that come with the source. The source is Ducacopy, which is a broker that is not known to have like the best trading conditions. So their spreads are different than the ones that we usually use on the brokers that we recommend, which are pretty much ECN brokers that stick to, most of the times at least, stick to the spread references. Although we have seen lately that during the closing of the days, the spreads goes absolutely crazy, and during news time, even with the ECN and even if they take commission, they still go wild with the spreads. So having the data from Ducacopy doesn't really make a great data source in terms of spreads. And what we did, we prefer to use a spread that is higher than the one that we usually use on our brokers, and see that worst scenario, how it performs. On the other hand, if people don't have access to these brokers and they use brokers with horse spreads or standard accounts instead of ECN, then I have to say that the results may be different, especially for scalping models. For swing models, it shouldn't make any difference really, not real difference. Is there anything else that we? I don't know if you read the conversation on algo trading. He gave a very good, let's say, algorithm tutorial on how to model the variable spread. And I wanted to do it for today, but I simply didn't have the time. So next time I hope I will have this. As he mentioned, it will actually bring the results closer to the real ones.
We can try, but I use a fixed spread, just the up border or the possible flexible spread size. Just the idea was very simple. If the settings will be profitable with higher spread size, which can be used. Of course, not all spread size can be used for such type of trading, which we have for trend following model. I think the spread size won't be so important at all. But for short-term trading, the spread size is really very important. And we just need to skip periods of time when spread is not workable, and when there is the upper border of spread size, and we use these settings based on the upper border of spread size and get positive results. It's okay. In real trading, we will see that there will be periods with lower spread, and there won't be signals and trades based on the higher spreads than the test. So from this point of view and this type of model, the idea is that real trading should be better than tests where we use only fixed spread. But in trading, there will be there will be this type of spread and lower, which will give better results.
Yeah. Next question, also from him. Fixed lots or risk percentage in testing. This one I can do myself, don't worry. I'll post it in the chat as usual. So, just a second. I might be wrong, but I believe that if we use fixed lots, the order of losses or wins during testing might not be important. But if we use risk percentage, the order of losses and wins plays a factor in the overall results. Absolutely. So when we test, we usually test our settings, for example, on risk percentage. But when we find the settings that are a candidate for working, we also test them on the fixed lots. And on the fixed lots, you will see always a much smoother growth or fall in drawdowns, because when the lots become significant, when the capital size grows enough that each time the lot size grows, like winning trades really grow the capital with so much that the lot size of the trade grows also, then definitely the drawdowns will be a lot deeper and sharper, because for example, you traded for 1 month to reach the next step of trading, like for example, from 0.06 you got to 0.08, and then when you take the first loss, instead of losing 1% of what you were trading before, now you're losing a lot more. So I mean, 1% means a lot more. So in real value, the drawdown will be sharper. Let me just see if I got this right. The order of losses and wins. Yes, it's the same. If your capital is higher and you're still trading 0.1 lots, even if you are at 100,000, even if you take 20, 30 losses in a row, you are not going to lose too much percentage-wise of your capital. But when you use fixed lots, it's good to use them for higher accounts where you have enough capital, where you don't look like, if you have $100,000 in capital trading and you don't care to risk too much, but you care to make maybe $2,000-3,000 a month out of it, or 4,000, then you should go for fixed lots, because risk percentage will give you higher risk and higher drawdowns. Okay, I got a bit mixed up in details here, but this was it. Oh, there was a second part of the question. Is it better to use fixed lots in testing rather than a risk percent? What would be the better for comparison of different settings to avoid amplifying wins or losses? or you think it does not make a difference? I think we use fixed lots for comparison between drawdowns. Dimitri, am I right?
I think it's better to use both types for testing because it will give you different type of information. If we use fixed slot for testing, you will see the picture how stable the growth can be. But with percent, you can see the size of possible drawdown, which is this data will be much more relevant and important, just if compared with the fixed lot size. So I suggest to use both types of you find settings, workable settings. Use them with fixed lots for testing. Use them with percent for testing. And if both the results are good, so it means the settings are workable and rather good.
And does that. Anything? Yeah, nothing. The next question, still from Shireen, is I'm putting it now. Based on your experience, what do you think? What do you prefer to use from the list of optimized parameters when running an optimization? Balance, profit factor, expected payoff, maximal drawdown, drawdown percentage, or custom? Depends on which stage. Like in the first stage is definitely maximal drawdown and drawdown percentage. We use them to filter out the bad settings, the ones that we never want to get here. Like you see, right now we had 20% drawdown in our robot, and there were already tensions in the group. But we usually calculate settings to go up to a 30% drawdown, so 30, 35, depending on when they are. So even that is kind of a low drawdown comparable to what we get in the most of the settings. So let's say 95% of the settings are way below 35% drawdown, like 70, 80, and many of them blow up the account. And out of the ones which remain, then we start looking at profit balance or just profit factor, something that is workable and keeps the drawdown safe. We're not looking for maximal profit because that is also a big drawdown, and that's just not workable. Human nature will not allow the robot to reach any good profit. And also it's risky because if we go out of bounds with the drawdown or if there are mistakes made, the account can blow up, and that's really not what we're looking for. And the last question is the one that I have understood the least, and I will try to give a partial answer at least. I'm placing it now. We are at 112 minutes. This was a very long stream. So it says, do you use in-sample and out-of-sample approach when optimizing and backtesting? In-sample for optimization and out-of-sample for validation? Any recommendation of periods? Should the in-sample be at the beginning and out-of-sample at the end? Or it should be the other way around? We use backtesting and forward testing. Having these large periods of time, like 10 years, allows us to, for example, as I said, we sometimes start with a 1-year optimization, then we go through 3 years. Sometimes I go inside them, like instead of starting in 2008 or 2009 and ending in 2018, I start in 2013 and go to 2016. Then I apply the same settings for the period between 2008 and 2013, and then I do the whole thing. Yeah, we try to. I think it's a mixed approach. It's not standard backtesting, forward testing, but for sure we vary the starting points, and also because we want to see how the drawdown performs in the periods where, for example, the trading cap is not reached, for example, not more than 100 lots, because then you have kind of a fixed trades, fixed risk trades, and we don't want that because the drawdown is not good there. So we split them in parts and test everything on pieces, you know. We don't overfit the tests. And by the way, since we started, this has evolved with us. Our testing techniques has evolved, and I do a lot of the testing, so I can tell you we have evolved. In the beginning, were a bit naive in our approach, but we became better and better. Also, it might be one of the reasons why the new settings are so slow to come out, because we take so much time to find them. Dimitri, we only have 3 more questions, and this comes from Jackson Bain. He is interested more about the returns that we can get, so I'm going to let you answer them, but first I'm going to read them. Just a second to mark them. So he says, I know we cannot predict the return of investment of the bot, but having it done 200,000 return last 10 years, shouldn't it be reasonable to expect something around the same return of investment for the next 10 years as well? It could be lower or higher, but on average, that should be the rough and reasonable expectations for the next 10 years. And also, do you have specific examples of why the return of the investment of last 10 years cannot be repeated? It was just a fluke, like a bit of luck. Anything in the next 10 years that we can reasonably could know that will make the robot act so differently to the last 10 years of the return of, from the point of view of the return of investment? Did you read the question?
I understand the question, and first of all, I want to say that just thinking about the profit only when you trade in the financial markets, it's just the path which will lead you to zero capital, because from just this type of thinking, you can get a lot of further mistakes, which will lead you to blowing up your deposit. First of all, you need to focus on risk management, money management, and how to use any tool, trading signal, trading strategies, or robots, how to use them properly in combination of proper money management and following the rules which must be followed. But if we talk about profit, possible profit, it can be different variants, and it's impossible to predict the future, and that is the main reason why we can say that in 10 years you will have the same results like it was from 2008 to 2018. The reasons that we can get different results are in we don't know market conditions. Market conditions can be the same, and we can just repeat the past performance in real trading. Their market conditions can be better, and you will be able to make more profit. But during these 10 years, it means the robot works without any technical issues, without any manual correcting, without withdrawals and so on. So you need to just reply yourself. Will you be able to hold money 10 years without without correcting the robot, without stopping it in the periods of drawdown? Just every day allow the robot to follow the rules day by day during 10 years. I'm not sure that all people can do this, and in some stage there will be just correcting in the robot's work, and sometimes it will be like I need some money to withdraw, and all these things will change the profitability of the robot in the future. Also, the market conditions during this new further 10 years can be worse, and in such way it will be logical to get not such results like it was in the previous 10 years and less profit, but it will be logical. So 3 possible variants where a human, a person, a trader will act a very important role. So if you allow the robot to fulfill the potential, you will get just the results which will be as close to the test performance as possible. If you will if your activity will affect the robots trading, so you will get another type of results, and they will be unpredictable also. But again, I advise to focus on risk management and just build this part of work in proper way and let the robot run in the long run. Then?
Yes, I muted my microphone, sorry. Well, that's it. It's been 2 hours and I'm exhausted. You have done most of the topics, so I don't know why my eyes are red and not yours. Well, thank you everybody for the questions, and we will use this stream to index it. We will index all the topics. We will index all the questions. We will point it out whenever these questions arise again. I want to continue having videos and streams about algo direction, especially when there is something new that we can talk about, or when we get new questions. Why not? I think it's much more interesting to have a to explain it not in writing, but maybe with examples. I'm glad our computers didn't fry with 2 hours of live streaming, and yeah, that's it. I think we can finish it.
Yes, thank you very much for spending with us this time. I hope we could give you some more ideas, because it's impossible to provide you all details and to build the perfect picture of algo trading and how the robot works, but we want to make step by step in this direction and share with you more knowledge and ideas and our experience about trading based on our robots, based on maybe other robots. There will be stream formats, there will be videos about this direction. So for us it's very important to get feedback from you. Just if you have something to say, please leave comments. You can find us in our Telegram channels, you can find us in Discord, you can send us private messages using our website. If you didn't subscribe to our channel, please subscribe, click the bell in order to get notification about new videos and new streams. We are going to make a lot of video content for our YouTube channel, and your support will be priceless for us for this. So thank you very much. See you next time. Have a nice week.
Bye bye.
Bye bye.